Hi guys, this is Mark Shawson, the pattern trader here. The golfer Gary Player used to have a saying, the more I practice, the luckier I get. And I guess really what I'm trying to say is if you do the right things, good things will happen. And now what I'm really referring to is that in the last month or so, I started seeing the Forex market volatility start coming down quite a bit. About a week or two ago, the entire daily range for the Australian dollar versus the US dollar was 18 pips. And so I thought this was a preview of coming attractions, that the markets were going to enter into a pretty quiet period. There wasn't going to be much to gain or capitalize on. But I still saw these patterns. And whether it took a month or 3 months to work out, to my mind, I saw these high value patterns and started getting short New Zealand dollar, US dollar, getting short Australian dollar versus US dollar, getting short gold, XAU versus US dollar. But on the other hand, I started shorting the dollar versus the Japanese yen. And as a result of these trades, my account has quietly gone up about $500,000 in 2 months, just sitting in these trades over the long term. I'm not fiddling with them. I'm not looking at a 5-minute chart. I'm not dancing in and out. I see these patterns which are going to translate to monster moves. And whether these moves occur a week from now or a month from now or 3 months from now, I don't really care. I just want to be there and participate. So I anticipate maybe going to the summer. It may be quiet. But in the meantime, these things are moving quietly. The Australian dollar just crossed a hair under the 70-cent support level. I think this is going to be a very ominous thing for Australian dollar versus US dollar long term. But today, I really want to focus on the dollar versus the Japanese yen. The dollar versus the yen has been kind of cruising higher over the last couple of weeks, going all the way from 104 to over 112 about a week ago. But when it crossed a hair over 112, I started alerting our members to start getting short. First at 111.61, then 111.46. I will show you in a minute that I did a bunch of other trades to get short, and now I'm making about $200,000 just in my yen trades position, and I expect these positions to go a lot higher. And in a moment, I'm going to share my analysis. I'm going to show you exactly why I started getting short myself, why I started alerting our worldwide member audience to get short. And I will share that analysis with you in just a moment. But in the meantime, I wanted to just share with you something that Doug had to say, because I think he's really picking up on the idea of the value of long-term trading. So let me just share with you, if I can, what Doug recently had to say. He says, Mark is truly exceptional in explaining his view of the markets for the longer term. This type of trading may not fit many. If you are a scalper or prefer to be in front of your screen all day, this may not be something for you. I've done short-term trading and have had good success, but with it, my time these days are becoming shorter and shorter to be able to trade this way. Mark's program allows you the freedom to trade and still have a life away from the computer, which suits me perfectly. So again, time is the biggest value we have. We can't ever give it, get it back. And to my mind, I just allow the market the time to work. And I'll share with you on the screen exactly why I got short the dollar versus the Japanese yen. In this graphic, you're seeing a picture of my own personal Forex trading account. Now, it has a lot of trades in it. I've actually been hitting it out of the park in a lot of the dollar crosses, including short gold versus the US dollar, short Australian versus the US dollar. But for the purposes of this presentation, I'm going to be concentrating on the yen pairs, most notably the dollar yen. And out of the $376,000 in open profits I currently have, I'm sitting in profits of about $185,000 in my yen cross trades. So I have about $139,000 in the dollar yen short and $45,000 in the euro yen short, on my belief that the yen is strengthening, certainly against the euro, But even while we have a dollar strengthening against most other pairs, the dollar is weakening against the Japanese yen. Now, I'm going to show you why. I've been predicting this for quite some time. You can see that I started shorting dollar yen in late March. So around the 20th of March, I took on a position. The 21st, I took on a position, and I got in admittedly a little early. So I jumped the gun. I got in short side of dollar yen at about the 110.71 area. And after this, dollar yen continued higher. It actually crossed over the 112. But you can see that I kept my stop losses purposely very wide, not to be just hit out by some arbitrary price action. And because I was so confident that this was going to turn on me, I just stuck it out and stayed in those positions despite the fact that it went 140 pips against some of my positions. But now you can see dollar yen is starting to turn in my favor, and I think this is just the beginning. You know, when I saw dollar yen cross a couple of weeks ago, I sent out an email to my members to get short dollar yen at 111.61, and then I said, you know, I would actually add to this position and suggested shorting it at the market, and at the time it was trading about 111.46, and you can see on those open positions I've got about $30,000 on these positions alone. So actually I think my calculations in dollar yen are off because it looks like I've made a lot more. But nonetheless, I also shorted euro yen here, making $45,000 on the short euro yen. And you can see that I've been in this trade since the 29th of April. We're now about 2 weeks you know, ahead of that date. And so I just sit in these trades. You know, if they're working for me, I'm not jumping in and out. I'm not looking at some kind of 5-minute crossover. You know, I'm looking at the big picture. And if this trend is going to continue in my favor, why would I jump out? So I'm going to show you why I thought dollar yen was going to turn and why I'm sticking it out for the long term. So now I'm going to show you why I favor the short side of dollar yen and the basis for which I put on those trades that are making me over $180,000 in the market right now. In this chart, I'm looking at the US dollar versus the Japanese yen. This is a weekly chart. This means that each one of these price bars represents 1 week in time. And hopefully you'll understand at the end of this presentation the value of looking at charts over the long term. Because frankly, when we look at a price bar like the one we see of the present price action, you know, it's just one page in an entire novel, if you will. It only tells one part of the story. But to my mind, this is the value of long-term charts. We can go back and look at the long-term patterns that are actually dictating the market action today. So despite the fact that we had a rally recently from 104 all the way to 112, you know, why would I be, you know, so excited and telling our members to start shorting this thing, you know, when you see this thing rallying like it has in the last couple of weeks? But again, this to me has just been a misdirect within the context of a long-term descending market. Now, to me, this story started a long time ago when we saw this double top peak right here at the 124 price level. So right here, when it formed this double top, and a double top is just the way it sounds, the market goes to an all-time high, backs off that high, retests the high, and when we turn back, now we have this M top. And that M top, that reversal, informs us, or at least it informed me, that this market had peaked. It had topped. And so when a market is topped, what is it going to do? It's going to go lower over time. And the key phrase here is over time. So despite the fact that this top happened in 2015 at 124, we're currently trading at 109. So incrementally, this has been traversing lower. Now, in addition to the double top, I also saw this head and shoulders price pattern. So you had the combination of the two price patterns, and a double head and shoulders looks just the way it sounds, where it looks like a man or woman's head and shoulders. You see that once it crossed this neckline here at 116, to my mind, it confirmed that entire bear price pattern, the combination of the double top and the head and shoulders. Now, more recently, dollar yen has been traversing within a long-term descending pattern, a descending triangle. You can see that over time, the lows have been lower. So we began with a high around 119, made another high at 114, set of highs around 114, and the last shot was a little over 112. But on balance, each bounce off this horizontal support line is incrementally lower. Now, when I saw this price action a couple weeks ago, I started licking my chops where I saw this double top pattern right at the resistance area of the sloping downtrend line. And then in combination with that double top price pattern, I also saw this key reversal where the market makes a new high and then closes on the low. Now, when I saw that, I sent out an email to our members to get short right there at 111.61. And then I sent out an email a few days later to get short at 111.46. And you can see now we're considerably lower at 109.63. And I'm making over $180,000 on my short yen positions. Now, just because I'm got a lot of money in my position doesn't mean that I'm going to just get out arbitrarily. Now, we are at a support area, dollar yen. We're sitting right at this neckline of this double top. I wouldn't be surprised to see us kind of peak back here and maybe trade a little more sideways, but ultimately we are going back to this 104 support line and then a lot lower. So if you would like to understand how I use these very simple but powerful and effective chart patterns to make hundreds of thousands and even millions of dollars in the market, then I would recommend you sign up to my 2-day boot camp. The boot camp is every Monday and Tuesday at 11 a.m. Eastern Standard Time. And this is a very comprehensive 4 hours of training where I go through the chart patterns, I take your questions, and people seem to love it. You can actually go to my review website and check it out. Now, the boot camp is available for the grand price of absolutely nothing. That means it's absolutely free for you to sign up. Just register and check in. And nothing is required of you. There's no tricks. I will, spend 4 hours with you, show you everything I know, and it's absolutely free. So it just costs you 4 hours of your time. So if you think you can benefit by this kind of analysis, then check out my boot camp. I'll attach a link with this video. And until next time, I hope you have a healthy and prosperous trading day.